Trading versus investing, deciphering the difference. Trading involves short term buying and selling of assets, focusing on price fluctuations, while investing entails holding asset for a longer period based on fundamental analysis. Investing is typically associated with more consistent profit over time, while trading can offer higher potential returns but with greater volatility and risk. Investors aim for long term growth, while traders seek short term gains. Between these two approaches, which one is better? A detailed understanding of these two concepts helps to figure out the answer. In this video, let us find out which approach suits whom. Welcome to holisticinvestment.in. When it comes to the stock market, there are two primary approaches: stock trading and stock investment, each with distinct profit-making strategies. In stock trading, profit is generated through speculative transaction based on short-term price movements. For example, one trader might sell shares anticipating a price drop, while another buys low and sells high to capitalize on price increase. However, in trading, gains come at the expense of others without contributing to capital appreciation. On the other hand, stock investment focuses on long-term growth and capital appreciation. Investors carefully assess fundamental aspects of a company and hold on to shares as their value increases over time. Eventually, they sell for capital gain, reflecting their patience and foresight. Trading focuses on short-term price movements, while investment aims for long-term growth. Understanding these differences is key for navigating the stock market effectively. Next, we are moving into taxation part. When it comes to taxation, the rules differ for long-term investor and stock traders. Long-term investors pay a 10% tax on capital appreciation, while stock traders face higher tax rates of 15% on short-term gains, which can even rise to 30% in certain cases. Overall, tax on stock trading is generally higher compared to tax on stock investments. Next, risk and patience. Regarding risk and patience, they are intertwined, influencing decision making in both trading and investing. Stock trading is a fast-paced world where decisions need to be made within minutes. This leads to impulse action. Rushed decisions in trading driven by emotional impulses often lead to significant losses. We miss the opportunity to make the right decision and often regret later. In contrast, stock investment is a whole different ballgame. Investing requires a long-term perspective, allowing for careful consideration and informed choices. Here, there is fewer chances of making rash moves. Balancing risk and patience are crucial for navigating the unpredictable nature of stock market. Are you engaging in stock investment or stock trading? Do you face risks linked to market fluctuations? Are you holding shares for long-term stability or trading for short-term gains? When the market rises, traders may adopt an investor mindset, and during declines, investor might switch to trading. This constant shift often results in losses. Traders often believe they profit more during market upturns and invest heavily, and when the trend reverses, they lose. Similarly, investors may prematurely sell stocks due to the fear of missing out the current gains. Investors who anticipate that there will be further dip in price may sell it and book the current profit. They plan to buy it again at dip. Unfortunately, if prices goes up, they miss out the potential gains. It is crucial to clarify your role as either an investor or a trader. Frequent role changes, particularly driven by fear, can hurt your portfolio. Maintain a clear strategy and be cautious of risks regardless of your chosen approach. Which option, stock trading or stock investment, yields greater profits? Let's explore the statistics. Nikhil Kamath, the founder of Zerodha, a prominent stock trading company, shared insights on Twitter. He noted that after analyzing traders over 3 years, only 1% managed to outperform bank fixed deposits in terms of profit. In simpler terms, while some traders may be profitable, many result in losses. The overall picture leans towards losses outweighing profits. So, why does stock trading struggle to generate significant profits? First, it inherently carries risks and volatility. Second, market fluctuations make predicting outcomes challenging. Third, not every trade guarantees profit. According to his tweet, most traders experience more losses or lower profits than expected. This highlights the importance of deep market understanding, strategy strategic decision making, and effective risk management for sustained trading success. On the other hand, investors who opt for long term investment can gauge profits over time. For instance, the Nifty 500 index has shown a 15.92% annual return over the past decade. 1 lakh investment in this index 10 years ago would now be valued at 4.38 lakhs. Similarly, the Quantum FlexiCap Fund has yielded an annual return of 23.92% over the last 10 years. 1 lakh investment in this fund a decade ago would now be valued at 8.5 lakhs. In conclusion, investors benefit from passive management, especially with stable funds like Nifty 500 or Quantum FlexiCap, resulting in substantial gains over time. Compared to trading, long-term investment in a stable market proves more advantageous due to lower taxes and transaction costs. A detailed blog post on this topic is available in our website and the link is given in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.